My name is Kairami Abdul Rahman.
Hi, my name is Ramakin Bejarafeni from class 5B.
Hello and Assalamualaikum. My name is Nurul Atira binti Khairuddin.
Hi, my name is Nurul Fatih binti Azmi.
Hi, my name is Siti Shamira Atirah binti Azmi.
Question 1E. Prepare the consolidated statement of financial position is at the 31st of December 2021.
First, I will explain about the consolidated statement of financial position for Great Berhad as at 31st December 2021. The balance figure that we get are RM6,533.44. In the non-current asset, there are few adjustments. For the property, plant and equipment, the adjustments are in terms of revaluation of asset, disposal of asset, and depreciation of asset. XL Berhad and Good Berhad have revaluation of asset, which is freehold land that are amounting to 3 million and 1.6 million each at the acquisition date. XL Berhad also revalued its asset at the end of accounting period, which resulted to 0.7 million. This surplus will be debited to PPE since the fair value is more than carrying amount. There are also two disposal of assets, which are machine and motor vehicle that are amounting to 12 million and 4.5 million each that will be minus from the PPE. Since the machine and motor vehicle have remaining useful life of 4 years and 5 years each, the accumulated depreciation of 3 million and 0.9 million will be added to PPE since it is overvalued. Therefore, the amount of PPE is 4395.8 million. Since there is no adjustment for the other investment and intangible asset, the amount will be 525 and 333 million each. For the goodwill, the amount of goodwill will be taken from each subsidiary company that we calculated in the question 1A, and it will be debited into non-current asset for 71.97 million. Moving on to the carrying amount of associate with Small Berhad, the amount will be 46.97 million. In calculating the carrying amount, we need to minus the consideration transfer with the unrealized profit of 0.33 million and impairment of 0.2 million. The amount of unrealized profit is calculated from the purchase price of goods from Great Berhad, while the amount of impairment has been given in the question, which is 200,000. Next, for the current asset. For the bank, XL Berhad purchased goods at 30 million from Great Berhad and it has already paid 16.2 million of the amount due to Great Berhad. Therefore, 60.2 million will be debited into bank account. After adding the amount of bank with the holding company, subsidiary and the adjustment, the amount will be 460.2 million. In account receivable, there are two adjustments. Big Berhad and XL Berhad purchased goods from holding company for 60 million and 30 million each. Therefore, the amount will be credited to account receivable that will be resulted in total of 360 million. Lastly, for the inventory, it will be need to deduct it with the unrealized profit. To calculate the unrealized profit, 20% on cost will be multiplied with the purchase price of inventory and percentage of inventory unsold. Therefore, the amount of unrealized profit for Big Berhad and XL Berhad are 5 million and 2.5 million each. So, after adding with the inventory, the amount will be 310.5 million. That's all for non-current asset and current asset. Then, I will pass the presentation to the next person, which is Nurul Fatih.
Thank you, Nur Atira, for the explanation. Next, I will continue to present the consolidated statement of financial position for part equity. The first item under equity is ordinary shares capital. On 1st January 2021, Great Berhad acquired another 20% of ordinary share capital of XL Berhad by issuing 12 million new shares. The consideration transferred for this acquisition is 67.2 million. Since Great Berhad did not record this transaction yet, therefore it will be credited to ordinary shares. So, we plus 2400 million with 67.2 million to get ordinary share capital. Next, the amount 8% preference share capital is 300 million. For GRP and NCI, the amount is obtained from consolidated statements of change in equity. To calculate GRP on 1st January, we must calculate all adjustments for the previous year. To get GRP, post-return profit of Great Berhad 539.1 million will be added with the post-return profit of Big Berhad 61.8 million and post-return profit of XL Berhad 1.44 million. Since Good Berhad was acquired during the year, it will not be included but will be recorded as acquisition during the year. So, the amount is 602.34 million. In this question, there is no adjustment for the previous year. Therefore, to get post-return profit, return profit as at 1st January will be deducted with pre-return profit. For the non-controlling interest, the amount of return profit brought forward was obtained after we totaled 575.1 million from Big Berhad and 197.76 million from XL Berhad. Both of the amount 602.34 million and 534.42 million will be used in the calculation in consolidated statements of change in equity to get the return profit on 31st December. Therefore, the amount for group return profit and non-controlling interest that has been obtained from consolidated statement of changes in equity will be transferred to consolidated statement of financial position, which is 650.69 million for group return profit and 720.65 million for non-controlling interest. Okay, the next item under equity is GARR. To get the amount of GARR, we need to sum up the ARR from Great Berhad, Big Berhad, XL Berhad and Good Berhad. The account revaluation reserve must add any revaluation and less with pre-revaluation. Since the ARR for Big Berhad and XL Berhad is 0, we just total up the ARR of Great Berhad 534 million and ARR of Good Berhad 0.42 million. So, the amount of GARR is 534.42 million. The last item under equity is other component of equity amounted to 31.68 million. Okay, that's all from me. I will pass this presentation to next presenter, Siti Shamira Atira.
Now, I will continue with the non-current liability in the consolidated statement of financial position as at 31 December 2021. First, for the 8% debentures, the value RM 450, 300 and 150 million comes from the statement of financial position as at 31 December 2021 provided in the question under column Great Berhad, Big Berhad and XL Berhad. While the value RM 45 million comes from the goods acquired amounted to 30%. We get this 30% from RM 45 million of the 8% debentures of XL Berhad from question, then divide it with RM 150 million from statement of financial position, column XL Berhad under the item 8% debentures. Then 30% times RM 150 million equals to 45 million. So 450 plus 300 plus 150 minus 45 will get us RM 855 million for the 8% debentures. Next is the current liability. The value RM 261, 219, 171 and 132 million comes from the statement of financial position provided in the question under column Great, Big, XL and Good Berhad. While the value RM 13.8 billion and 60 million comes from the journal entry for payment in working servant, where Big Berhad buy goods from Great Berhad, but Big Berhad did not make any payment to Great Berhad yet, amounted to RM 60 million. Therefore, it will be debit account payables RM60 and credit account receivable RM60. Then, XL Berhad also bought goods from Great Berhad and paid Great Berhad RM16.2 million. So, debit account payable 13.8 because RM30 minus RM16.2. This is because since RM16.2 is the amount that is already paid, so the remaining debt is RM13.8 million and credit account receivable RM30. Since the normal balance of account payables is credit, but in this situation the account payables is debit, therefore we need to minus. So 261 plus 219 plus 171 plus 132 minus 13.8 minus 60 will give us RM709.2 million for payables. For the accruals, there is no adjustments. The value RM129.6 plus 75 plus 39 plus 21 million all came from the statement of financial position provided in the question under column Great, Big, XL and Group Berhad. The total for accruals is RM264.6 million. Total up all the value of equity and liability and we will get RM6533.44 million as well. Now I will pass to Khairul Amirin to explain on the question 2.
Let's proceed to the question 2. The scenario of question 2. Neil Berhad and Sinji Berhad involved in the property development business acquire 50% shares respectively in F&E Berhad on 1st January 2020. Following the acquisition, Neil Berhad and Sinji Berhad appointed one F&E Berhad senior management team member. Senior management appointed by Neil Berhad has the right to make key decisions on an important project of the company and how the project is financed. Neil Berhad also has supervisory roles in monitoring the project undertaken and getting related approval from the board of directors. There is no contractual arrangement between Neil Berhad and Sinji Berhad to consult Sinji Berhad or make a collective decision.
Question 2. As a group accountant, discuss your opinion on NEL BHD, Shinji BHD and F&E BHD with reference to the relevant MFRSs. MFRS 10 Consolidated Financial Statements and MFRS 11 Joint Arrangements.
What is the definition of MFRS 10 and 11? According to MFRS 10, consolidated financial statement which provide guidance for determining whether control exists. When an entity has a control over another entity, they form a group together although both the entity remain separate physically and legally. The investor controls the investee only if it has power, exposure, or rights, and the ability to use its power over the investees. According to MFRS 11, joint arrangement is an economic arrangement whereby two or more parties have joint control. MFRS 11 joint arrangement establishes the principle for financial reporting by parties to joint arrangement. In accordance with the standard, the following characteristics identify a joint arrangement. The first one, the parties are bound by a contractual arrangement which can be evidenced in the writing form of a contract or documented discussion between the parties. The terms of the arrangement could be incorporated into the article, charter, or bylaws of the parties with vested interest in the joint arrangement. Some of the areas covered by the contractual arrangement are as follows. The first one, the activity, duration, and reporting obligation of the joint arrangement. Second, the appointment of the board of directors or equivalent governing body and voting rights of the ventures. Third, the decision-making process. Matters require decision by the parties and the required level of support for those matters. Fourth, capital or other contribution by the parties. And the last, manner of sharing among the parties of the joint arrangement's asset, liability, revenue, expenses, profit, or losses. Second of the characteristic is the contractual arrangement give two or more of the parties joint control of the arrangement. What is joint control? Joint control is defined as parties contractually agree to share control and decision about the joint arrangement, relevant activities, and having unanimous consent of all the parties sharing control. The parties should act together to direct the activities, and there should be no single party controlling the arrangement on its own. A party that has joint control can prevent the other parties from controlling the arrangement. I will pass to the next presenter, Lukman, for summarization and conclusion of question 2.
For summarization, in this case, Nel Berhad and Shinji Berhad, both in the property development business, acquire 50% each of F&E Berhad on January 1st, 2022. As a result, they wield significant power over the company. Because of their significant influence, they were able to influence the investing financial and operational policy. This is clearly visible when Nel Berhad is in charge of overseeing the project of obtaining board approval. This demonstrates that Nel Berhad is actively engaged in the operation. Since Nel Berhad and Shinji Berhad get no contractual agreement and have equal portion of power, which is 50%, both of them are not considered as a joint arrangement. Therefore, Nel Berhad does not fulfill the criteria of joint control. Nel Berhad cannot control the arrangement on its own and did not act together with Shinji Berhad to make business decisions of the company F&E Berhad. To answering the question number 2, as a group accountant, Nel Berhad cannot act on its own to make decisions about the relevant activities of the arrangement. Hence, it is considered inappropriate by Nel Berhad since both parties have equal voting powers, which are 50% of F&E Berhad shares respectively. It is advisable for Nel Berhad and Shinji Berhad to have an official contractual arrangement, such as a written document, to make both parties agree and bind them to act as a whole company, thus fulfill the criteria of joint arrangement. Hence, both parties will be considered as a joint control, where Nel Berhad needs the consent of Shinji Berhad to make decisions about the relevant activities related to the F&E Berhad.